Hey, hi everyone. Welcome to another video in our AI predictive models. And today we are gonna go through Ensemble AI models and how these are used in trading and for predictive modeling in trading, and some examples of how these are used and some impressive backtest results and specific examples that we'll go through. So Ensemble AI models, what are these? These are, these combine different predictive algorithms. It's basically a combination of different individual predictive algorithms, and that's what is called Ensemble AI model. Um, so what are the different individual predictive models? It's like LSTM, neural networks, random forest, ARIMA, SVM. So these are all individual or reinforcement learning. These are all individual AI models, predictive models. And this ensemble AI models will combine these multiple predictive algorithms, and it's growing in popularity for trading because it boosts accuracy and reduces bias and adapts better to changing markets. Okay, so yeah, so ensemble models are used in trading, and they blend basically predictions from multiple algorithms. So like LSTM will give one prediction, neural networks, convolutional neural networks will give one prediction, random forest will give one prediction, ARIMA will give one prediction, SVM will give one prediction. So they blend all the predictions from these multiple algorithms and also technical rule based systems to produce a consolidated and a more reliable forecast. So it's basically getting, think of it like, getting several expert opinions and using their combined wisdom to basically make smarter trading decisions. Yeah. The random forest model, what we did is you put a lot of parameters into it, and yeah, then it becomes, multiple parameters will give you a more a better probable predictive prediction for tomorrow, because multiple factors are put into it, and when all of them together say that this event is going to be most probable, so it will, the probability of that happening is higher. But here what you're doing is, you're not putting multiple factors, you're putting multiple algorithms together, and ensembling them together along with technical indicators, and taking that combined wisdom to improve your trading decision or prediction. So how they work in trading, you basically train each model separately. So one LSTM for temporal patterns, one ARIMA for linear trends, one Bollinger Band script for breakout detection. Like that, you will train each model separately. Then you will combine the outputs. So simple average, a bagging, and a refined boosting, and a sophisticated stack models where outputs feed into a meta learner. So what is this bagging, boosting? So let's go through the example. What is this bagging and boosting? So I'll just go through high level what bagging and boosting is in ensemble words. So bagging, if you see, so bagging is you'll allow multiple models to run parallelly, and then the result will come. Whereas boosting is, you will run one model sequentially, and then the sequential models will basically provide or basically uh, you know making or being used for the output. So that's the difference. So bagging is, multiple models running in parallel and feeding the output, and boosting is each model running sequentially and at the same time boosting the output. So that's what bagging and boosting is. And yeah, let's get back. So yeah, so you basically train each model separately, and then you combine the outputs, simple average, bagging, okay. So running parallelly, all of them, and then a refined boosting method running each one of them sequentially, and a sophisticated stacked model where outputs feed into a meta learner like XGBoost. So that's what you could use, to combine all these outputs from different models. Then you backtest this ensemble strategy, evaluate in sample and out of sample, and compare to benchmarks. And then if the results are positive, then you deploy and generate live signals, and retrain the model periodically. Some of the backtest examples, performance highlights of this ensemble models are Bollinger plus LSTM ensemble. So this is Bollinger bands plus long short-term memory models together. This ensemble model assets tested is 50 S&P 500 stocks from 2018 to 22. Results were it this model was able to generate a CAGR of 6.45% with a Sharp ratio of 0.49 versus benchmark S&P 100% in market. So the benchmark only provide means was able to generate 4.92% with a Sharp ratio of 0.43. So it did better than the benchmark. It outperformed both standalone Bollinger as well as the benchmark market also. ARIMA, CNN, LSTM model. So three models are mixed here. ARIMA, CNN, and LSTM hybrid. So the assets tested are Shanghai Index, Bitcoin, and EU ETS credits. Results are hybrid model had lower forecasting errors and better directional accuracy than individual ARIMA, CNN, or LSTM models. And this shows combined models capture linear and non-linear patterns more effectively. So it basically outperformed each individual models and was reduced the forecasting errors, and it was better in terms of directional accuracy. And the next one is LSTM plus random forest combo was used, and application was predicting next day returns based on technical indicators. These results also highly this hybrid outperformed a single LSTM model in error as well as in directional accuracy. Transformer of Ensemble agents, so stock and crypto trading task. So this is a transformer AI model, and Ensemble agents achieved higher returns and better Sharp and lower drawdown than single agent models. Stock classifier Ensemble, so assets or US stocks 2011 to 19 methods are combining the naive base decision tree logistic regression and SGD. So all those four AI models are combined together: naive Bayes, decision tree, logistic regression, and SGD. We'll go through naive Bayes model also in detail in one of the videos. So it generated 54.35% over 8 years. Meta learner stacking. So this model combined ensemble model combined LSTM, GRU, CNN with XGBoost meta learner. It achieved 7% MSC reduction and 3.5% improved accuracy and a map of 2.24%. Why ensembles work basically? They reduce overfitting and bias. Errors from one model can be offsetted by the other model, and yeah, capturing the diverse patterns. So ARIMA could be used for trend, CNN for spatial features, LSTM for sequence memory. So we use the best of all the models, and yeah, adaptive. It performs performance weighing adjusts as market conditions evolve. Limitations are it's complex, so more hyperparameters are there, so model tuning is required. Computation power is more, training time will be more, overfitting risk is there. Okay, so we need to see some cross validation and auto sample testing. Again, summary is Bollinger plus LSTM ensemble on S&P 500 between 2018 and 22 had a CAGR of 6.45 versus the benchmark of 4.92. ARIMA and CNN LSTM hybrid on indices BTC and EU ETS had lower forecast errors and better accuracy. LSTM plus random forest on technical indicator model beats a standalone LSTM. Transformer agent ensemble on stock and crypto contest had higher returns and lower drawdowns. Classifier ensembles on US stocks between 2011 and 19, 54% total profit over 8 years. Stacked deep learner plus XGBoost mixed models, 3.5% improved accuracy and lower error. So bottom line is basically this inline ensemble AI strategies, yeah, harness the strengths of different models, the statistical deep learning tree based to build more robust and adaptive trading system. And backtests basically show improvements in return, reducing the forecast errors, more accuracy and risk management. They are increasingly favored by top quant firms like Two Sigma, Renaissance, and AQR. So that's it for today, guys. Thanks everyone for joining the call. Have a nice day. Bye.